what's up with Adani Wilmar? Because it was a decent set that the company reported, but what about the outlook is something that we want to discuss with Mr. Angshu Mallick. He's of course the MD and CEO at Adani Wilmar, joining us on the show. Hi Mr. Mallick, good to be speaking with you. I'm looking at your margins and they have just remained between that 2.7 to 2.9% levels. But is it fair to say that at least for FY25 that worst is over, and from here on there is possibility of those levers for margin expansion?
See, we have been in that range of 4.5% to 5%. This year has been bad because of the first half of the year. But going forward, the margins are likely to improve. 2-3 reasons for this. One is that commodity prices remaining stable, the brands generally perform better. That is one. And the prices have come down. So inflationary pressure is not there so much in edible oil and in other basic foods. That is one. Two, it's also a factor of distribution. How is your reach? And the higher the reach, higher your ability to reach any retailer directly, so that you are nearer to the consumer, your ability to price your products higher is always there. So that is another place where we are working on. Third is the efficiency of purchase, procurement, processing, transport. All this becomes better as your volumes goes up. So food with 1 million ton volume and edible oil at around 3.5 million ton volume gives us enormous scope to manage the plant efficiency, distribution efficiency, supply chain efficiency, and reduce our cost of manpower, advertising, and all that. So going forward, we will have better margin structure.
Right. Mr. Mallick, foods and FMCG revenues this time around have almost doubled. In fact, in the last 2 years, we've been seeing rising trend. What's the outlook from this segment here? And do you think revenue can come in closer to 5,000 crore?
See, in this food segment, the big three are rice, both basmati, non-basmati. We have wheat flour, atta, suji, rava, maida, entire thing, including branded whole wheat. And the third driver is the pulses and besan category. So now all these three, if you see, are majorly still today sold in loose condition. So branded packed shares is hardly 8 to 10%. So now that gives us a tremendous advantage to build the brand and build up the branded segment and share here. So that we are confident, because we have doubled in turnover in 2 years, is an indication that it's possible to grow at these rates faster. Last 10 quarters, we have grown at 30% quarter on quarter in domestic business. So we see a great opportunity as we make more and more inroads into rural market. We will have strength. That is one. 45% of our branded besan today comes from the rural market. So you can imagine how, if we can push our products in rural market, we can get more volume. 25% branded sugar comes from there, 25% of rice, and 18% of atta sales comes from the rural market. And that is where we are trying to push it more.
Okay, Mr. Mallick, but the other vertical, which is industry essentials, that saw a volume and a value decline. What's the outlook for FY25 when it comes to this segment? Should we expect a growth then?
See, in industry essential, we have three main products. One is oleochemical. Oleochemical business has been growing fast, and we have done more than 20% growth there. So oleo business will continue to grow, and there is no problem there. Second is castor. Castor, we are running the plants at around 95%. And we have almost reached the full. We are the world's largest castor oil player in terms of processing and exports. There also, I don't see any great problem, and we have done well. What has been an issue is the oil meal export. And oil meal export, normally rapeseed meal and soya meal. Soya meal has not been very competitive. So the business was not doing well because internationally the meals were lower priced. So we had a little tough time in terms of generating volumes. But going forward, as the new mustard season has just started, the new meal, oil meal, rapeseed oil meal will be available now for exports. So I think the Q1 of this year, FY25, should be better.
Right. So the numbers in FY25 should be better. But what sort of top line growth is AWL actually aspiring for? across all these segments?
Look, see, overall, edible oil has been growing. This year has grown at 10%, which is very good, I would say. We don't see normally double-digit growth in edible oil because the category is quite penetrated and it's available. Surplus is there. So, but looking at the next 2-3 years, I think we should continue to grow edible oil at around 7 to 10%, depending on which year and what price. When it comes to food, we have been clocking at around 30%. This year was 18-19% because of the export problem of rice. But I think going forward, we have cracked that in the sense that we are exporting more of basmati rice and all that. But yeah, domestic rice business has also increased. So volume on food, we will continue to clock anything between 25% to 30%. If that happens for the year on year for the next 3 to 5 years, food business should be double. Volume 1 million ton should become 2 million ton by end of the 4th year. So I feel the volumes will be much higher and better.
Okay, Mr. Mallick, thanks so much for making time. We let you go, but staying with Adani now, Adani Power has reported quarterly.
If you like this video, then like, share and subscribe to ET Now.